Hello, everyone, and a very warm welcome to today's cryptocurrencies update for January 26, 2024. This is the slide from last week. Yes, all through the week we have been looking for the bounce, and finally it has arrived today, with Bitcoin up almost 6% and Ethereum up almost a little bit over 2.5%, to be honest. Not as much. It really looks like this bounce is finally here. So what we've been looking for the last week has finally transpired. So let's change the date then correctly to January 26. We knew it was coming. Sometimes with corrections, you just have to be patient because there's so many ABCs we have to go through before we get the larger B wave. That looks to be the case. So let's see where we're going to head next. And if indeed the correction is already over or not. First and foremost, the bigger picture. This is our bigger picture analysis. This goes back all the way with data to 2011. And of importance here is, of course, the 4-year bull phase, or not actually, rally phase that we have: early bull, mid bull, late bull, and a bear market, etc. This has repeated itself now for 3 times, so for 12 years. This was devised by CryptoCon on Twitter, and he's been so generous to share it on Twitter. And when you see great stuff, you got to adapt it and help it. And I think we took it to the next level, applied Elliot wave to it. This is absolute next level stuff. Let's keep it nicely. And in the blue boxes, as you can see, which is the early to mid bull phase for Bitcoin, we'll see weakness in the first quarter of the mid bull year, which in this case is 2024. And before that, it was 2020, etc. You see weakness every single time. It's a wrapping up of 1 and 2 waves. The March 2020 was the strongest weakness we've seen, but every time weakness has been resolved to the upside. I know data points are minimal. We only have N is 3, so it's not so much to go by, but all of them resulted in the same resolution, right? We got the same resolve. So as long as it's the case, we'll stick with it. So as long as we hold above at least 25,000, we can move higher, with, of course, the ultimate line in the sand, the 2022 lows at around, I believe, 15,000. That's the ultimate line in the sand. But I think we're wrapping up a 1-2 of a third wave. On a log scale growth curve, matches as well, with a final upside target once again into the 6 digits. Okay, we're looking for 100. I would say 120,000 plus or minus 20,000, somewhere around there. But we can go higher. Things tend to extend quite a lot in the fifth waves of cryptos. So we can go all the way almost to 280,000. I'm definitely not going to promise the sky. So we'll assess for now somewhere around that 140,000 seems quite nice. Also here again by CryptoCon, we have some nice projections between 103 and 210. So divided by 2, the average is 150,000, which matches quite nicely. Our friends at ElliotWaveTrader.net posted an article on their public website where they're looking for about 125,000. So I think the stars are quite good aligned. Again, we have to hold above at least last September low at 25,000 for Bitcoin, and at least above that will allow us to reach that high. If we break below it, I expect 12,000. Ethereum should target somewhere around 10,000 plus minus 2,500, by the way. But since Ethereum hasn't been around as much, we cannot do these cycle projections as accurately. We just have too little data to go by. But as Bitcoin goes, so will Ethereum go. It has done so its entire lifespan so far, so we'll stick with it, right? Everything works till it doesn't work anymore. But we have price levels to know when it doesn't work anymore. So here we are. We finally have our bounce. All right, this looks pretty good. And I expect it to reach, again, somewhere around 43,000. This is our bounce target zone. And then we get our C wave lower. Okay, so far so good. This still looks pretty good for a bounce. It looks kind of similar to what we saw here in April, for example. kind of similar to what we saw here in July, similar to what we see here in August. As you can see, we flatten out, we bounce, and then we drop. We flatten out, we bounce, and then we drop. You flatten out here, you bounce, and then we drop. So that is the pattern. I don't know how long it's going to take, a couple of days probably. And that will watch for the C wave to transpire. This can take anywhere between, I would say, right now we're in day 4, can take another week or so. Definitely not out of the question. Again, this is our bigger picture, matches quite nicely what we're seeing. And I wanted to share another tweet by CryptoCon as well, where the argument is the bottom in, yes or no? Well, most likely not, okay? Based on some technical analysis, is that we would still see a retrace to the low 30,000s. Okay, retrace to the low 30,000s. Well, mid 30,000s will do as well, right? Somewhere around 36,000 plus or minus 2,000 would sit quite nice, okay? And also because the previous rallies, yes, we saw 20% corrections as you see now, but those were not as big as the current move. So that would then suggest that we should see a bigger drop as well. So all in all, we're just not quite there yet. I agree. It is possible. There are technically enough waves in place to consider all of this complete. But for now, I think we should just be patient and let this bounce just go through price and time and target our 33,000 to possibly as high as 46,500. So I am still okay with what we're currently seeing. I have no problems with these price targets. I don't see a reason why this cannot be achieved. Moving on then again to TradingView. This is of course our bigger picture. I can't state it often enough. It is really important to understand where we are in the bigger picture when we are dealing with these small scribbles and daily updates. And again, I don't want to bother you too much, you know, with this type of stuff we've had here on Thursday, Wednesday, and it needed more resolve. Yes, we got this rally. I'm sorry, I could not foresee that it would happen today, but we were waiting for it anyway. We were waiting for it, so this is no surprise. That's the whole point. Why? Because it's so far still overlapping, all that stuff. No surprise. We knew it was coming. We were already looking for it last week. Well, last week decided to tag on another little leg lower, and I think we're looking good here. So that's the whole point. Okay, so similarly for GBTC, no surprise here, really. We had this blue target zone here. That was the ideal wave A target zone. We had this B and the C. It's been on the map. So it's just, you know, we knew it would happen. And here we are. So no surprise, whatever the reason is. And maybe the low is already in place to be determined. That's why we have these price levels to watch. We're right here at the blue line, which is the first warning level for the bears. All right, above the gray line, second warning level, orange line, third, and above the red line, we know we're going to go well into the 50s and 60s for this red wave 5. Then wave 4 has already bottomed. Very simple, okay? So as long as we hold below this week's low, we're going to move higher, right? Ideal target for the bounce, though, is $39 to $40. From there, we should then move lower to about $30, $31. Akin to, of course, what Bitcoin should be doing. That is no surprise. There's no difference there. Okay. I anticipate the RSI to kind of become overbought and then we drop. That's typical for a B wave. Doesn't have to be that way, but that's quite typical. So far, so good. We had this pattern already on the map. Looks good. I like it. We're on track. Everything is still on track. And similarly for Bitcoin, right? We're right here at the first warning level. Okay, so if we go above it, we're going to go to most likely the second warning level with, of course, resistance here at the 50-day and 20-day moving average, which currently are residing at almost 43,000, 42,913, 42,675. So that seems to be a logical target. But this is the target zone, which is a typical, I would say, 50 to 76.4% retrace. I like it. Moving on to Ethereum. Ethereum is lagging a little bit. It might want to try for a lower low. Okay, I'm not too sure about this one just yet, that the bounce is in place. It is not as strong as for Bitcoin. Bitcoin is front running. So we could have, for example, A, B, and then 1, 2, 3, 4, 5. We're going to revisit 2120 and then we bounce. So Ethereum, I'm not as clear on as yet, but for now, we'll let it play out as it is. But we do need to see above 2335-ish, I believe it is, 2330, the 50-day simple moving average, to be much more certain this B wave is underway. Okay, as you can see here, the Bitcoin is already much further ahead, right? It has retraced the whole previous week, and Ethereum has certainly not retraced the previous week. So it's a little more volatile with less of a response. That's okay. So hold your horses on this one just a little bit. Might go back to 2120 first. Then we have 1, 2, 3, 4, 5, and then we bounce. But also here, I'm pretty sure we'll get a bounce. That is kind of my bottom line here. Just waiting for it, and for Bitcoin, it has arrived. ETHE, on the other hand, is doing much better. Some people say, why are you still showing a GBTC and ETHE? There's no other spot ETFs out there as well. Well, I don't have anything else than ETHE to track Ethereum. So I want to kind of compare apples to apples. GBTC and ETHE are both grayscale. Of course, GBTC is technically not a trust anymore, but ETHE still is. Anyway, let's compare the same ones. And the other ones, I still have very little data available. Once we get more data available, we can maybe find another ETF that is even better than GBTC. For now, we kind of go with what we know, what we're familiar with, and we stick with it. So ETHE should also be bouncing here to ideally around $20.50, plus or minus 50 cents, and then drop to potentially as low as $1.15 or $1.14, with, of course, support here at $16.25, A, B, C. I like it, nothing out of the ordinary here whatsoever. Okay, so this was also anticipated. Mara, finally, as well, we got our bounce. We've been looking for it. I must say the previous 5 trading days, right? These ones were kind of messy, so there was nothing I could tell you with that. This type of stuff cannot be resolved with going higher or lower. But this looks pretty good. We're right here at the first warning level at around $18, and we got to 18.45 intraday. But right now we're still below it. So the question is, are we going to see 4 and 5, or is all of wave 4 already in place? We need to see much higher prices, of course, with the subsequent warning levels, right? We're not even at the gray one. We're not even above $20, $21. If we get above $20, $21, odds start to increase. This is not a fourth wave. We then move above 23. Not going to happen, because then what we're dealing with is some sort of ending diagonal, because fourth and first waves cannot overlap. But so far, so good. We knew that after 3 comes 4 and after 4 comes 5, but that we just don't know yet. So that's why we have it in blue, right? 1, 2, 3, that's the outcome. And let me just be clear. That is, of course, in question marks, right? That is always in question marks. Is it a 2? Is this a 3, right? Is this a 4? And are we going to see a 5? Because that is kind of what we were looking for in RIOT, but RIOT seems to be in a bit different wave count, because RIOT did not go above its summer high, and Marat did. So they're a little bit different, right? So this is the summer high for RIOT, July, and this is the December high in RIOT. You see, it's a lower high. Marat had a higher high, so it's a different wave count. Okay, so that's why this 1, 2, 3, 4, 5 is still possible on Marat. Now it's a very deep fourth wave, but as long as we don't overlap with the first wave, it's still very possible. So RIOT bottomed in its ideal third wave target zone and is now bouncing, and it's above its first warning level, which was at 11.25. We're now in the lower end of this wave 4 target zone already. The ideal one is in green, but we could just stall here in the blue one, and then we drop for wave 5. The wave 5 is my preferred scenario, 3, 4, and 5. Why? Because this is then a flat correction. 3, 3, 5. It must be 5 if this is a flat correction. If it's not 5, well, then we have to reassess our entire wave count once again. But this does look better as 3 down, A, B, and then 1, 2, 1, 2, 3, 4, 3, 4, 5 for A, and A, B, and then, of course, a C wave, picture perfect. We had an expanding ending diagonal wave 5 for wave A. We had a leading expanding diagonal for wave A. Quite crazy. Wow, wow, unbelievable. But it all matches really nice. But that's all past and water under the bridge. We're now looking for this wave 4. So we're already getting into this stopping zone. A little bit higher would be ideal. I do want to point out here the similarity with August. And now, look how we set up. Look how oversold we got here. Even more oversold, of course, in August. But it kind of shows we have similar setup, right? See that? See that? And then we bounce. This bounce was only for a day, and then we declined. And then we'll see something similar set up on the MACD, and eventually all that positive divergence will matter. Okay. So the technical indicators do suggest that we're in a similar 3-4, right? 3-4, 3-4-5. And this could be done in the day. And this one was deep and long, and the 4 is like shallow and brief. Let's look at some altcoins. Link is still nicely on track. If we get a down month, we only have 5 more days to go. And then a new high above last month's high. We have our classic 5-wave sequence up in the books based on monthly closing prices. And then we're going to look for a deeper retrace for wave 2. And after that, 3, 4, and 5 for primary 3. So get ready for this one. I really hope we're going to get 5 waves up. Because if we get that, oh my God, that would be really, really nice, because then we're going to set up for at least a C wave. Let's put it like that. At least a C wave, a about $15 C wave, something like that. That will bring us easily to $25, $30. Okay, so please understand that, of course, after 5 waves up could be a wave, but that's not our preferred scenario. Our preferred scenario is that we're in a 3rd wave. And the 3rd wave will certainly go to new all-time highs. Solana could have bottomed today for all of this red wave 4. It's been deep enough. It's been reasonably long enough. If you look here at how long wave 2/B took, it went here from, let's say, February, so 1 month, 2 months, 3 months, almost 4 months. And now we're in here at least a month. So we're in the same ballpark. At least it took a month. Okay, we don't want to see a 4th wave last 2 days, and then the 2nd wave took half a year. That is kind of odd. Though price is the final arbiter, not time. We now have a little bit more symmetry. Alternatively, this is only wave A, and this was a complex wave A. We got a complex wave B, and we're going to get a simple wave C, meaning an impulse lower for wave 4. And that wave 4 can still target somewhere around 65. So as long as we hold above this week's low, we're going to move higher with subsequent warning levels. So also this one looks kind of good bottomy. Let's put it like that. All right. So I think I've covered everything from the short term to the intermediate term. All right. Our bounce is underway for sure in Bitcoin. This is the biggest counter trend rally we've seen since the January 11 high. And maybe that will fake a lot of people back into the ETFs, because they were all like, oh, we're all down and this is great. Everybody piles back in, and lo and behold, they're going to get smashed again. That's the unfortunate nature of the market, but you should not be in the financial markets if you don't know what you're doing. As long as you have an exit strategy in place, you're good. If you don't have an exit strategy, you don't know what you're doing, it's on you. That's not my problem. That's why I have no sympathy for anybody who bought those ETFs when they were first traded on January 11th, sight unseen. You just don't do that. As long as you know what you're doing, you can do it. We're not going to drive a car if we don't know the traffic and we don't know how to operate the car. We're not a surgeon if we don't know how to operate the person, etc., etc. Can't be a history teacher if I don't know history. You got to be what you know. With that, have a great weekend. Enjoy the bounce while it lasts. And once we've reached the target zones, it's time to become a little more cautious. And remember, in bear markets, this is a shorter term bear market, of course. Bear markets meaning where sentiment is negative. So you have 2nd waves, 4th waves, that type of stuff. But in bear markets, or in bull markets, in bull markets, the upside often surprises and the downside disappoints. So we're now in a counter trend rally. And that means that we have, of course, the opposite, that we might have a disappointing upside. But for now, everything is on track. It's a lot of words, but I think I owe you guys a little bit extra detail, because the last couple updates were rather short and brief, but there was nothing to say. I mean, yesterday was a 0.5% day. I mean, what else can I tell you then? See yesterday. With that, have a great weekend. Enjoy the bounce when it lasts, and we'll catch you all next week. Bye.